Okay, good morning, everybody, and happy holidays. We are at the end of 2023. It's December the 19th, believe it or not. And we are going to bring you one last episode of the Wilton Report for 2023. We're going to take a little bit of a hard look at the current market conditions, and I would describe the current market conditions for buyers as hard, but we'll get into that. We'll just get started and get right to it. So some good news, the Wilton Report is the most watched Princeton real estate podcast. And I can say that because we're the only real estate podcast. So I'm only kidding. This is really just to see if you're paying attention. But I do want to thank everybody for their support this past year as we've developed the podcast. We do get great feedback on it. And again, if you have ideas, I'm going to send you my cell phone number in the next couple slides. You can always text me if there's something you wanted to have me talk about or have a specific guest on the Wilton Report. So just as a reminder, we do offer property management services, PrincetonPropertyManagementServices.com. Feel free to check us out there. We are going to be developing ADUs in Princeton with Princeton Home Connections. That is an ADU development company helping to hopefully solve some of the real estate gridlock for people and build some more supply in Princeton, which we don't have a lot of. We'll get into that in a minute. And again, we have a lot of realtors who watch this podcast. And I'll just say this. I don't talk about this a lot, but obviously we have Queenston Realty. And I can tell you from a real estate agent perspective, we have the best compensation plan for realtors in the market. There's no question. But every other company we have, you're either designed to get title equity in or get paid on. So there's no other real estate company that does what we do in terms of compensation and then either offer you compensation and or equity. So the realtors who are here, at the end of the fourth quarter, they're going to get their title shares in Princeton Abstract. So it's a pretty cool format. So if you're a realtor and you want to chat with us, just shoot me a text. I'll send you my text in a minute. Some save the dates coming up. We're going to be doing a first quarter market seminar Saturday, February the 3rd at 10:15 a.m. That is not a live QR code, so do not scan it. This is just to save the date as a placeholder. But you can put this in your calendar. We're going to be doing a tax appeal workshop, February the 29th, 6:15 p.m. It'll either be here at the office or in Zoom. Same for the residential workshop. This is a workshop designed to help you understand how to appeal your taxes and the pros and cons, because there are pros, you save money. There's cons because your assessed value goes down. It could impact your sale price in the future. So if you want to register or get the Zoom link for either seminar, just shoot me a text. And or if you're a realtor and you want to chat, send me a text. And or if you're just looking for a different, if you're looking for a specific topic for me to cover, shoot me a text and I'll cover it. But just if you're looking to register for the seminars, just put in market seminar or tax appeal so I know which Zoom link to send you. So that being said, let's talk about the market. So interest rates, really fascinating. Now, I will say with some level of chagrin that 4 weeks ago, I think it was our last podcast, which I apologize for, I did say that I did not see rates really like dropping precipitously. They have dropped. My bet is they stay in the high sixes throughout the year, low sevens. The Mortgage Bankers Association thinks low sixes by the end of 2024. Goldman Sachs thinks like in the high sixes, low sevens by the end of 2024. I tend to be more with them. I think there's more push with the economy with jobs than we know, but that's my opinion based on what I read, at least locally. That being said, this past Wednesday, rates dropped to 6.82%. And Jerome Powell, who's the Fed chair, was starting to talk about rate cuts. So we'll see. Inflation is more in check than it was. It's not over. Now, that being said, the day after this rate drop, rates did go up a little bit because they had a pretty big jobs report. So this is just going to be, I think, the ticky-tack back and forth, right? I think jobs are going to stay strong. I think rates were going to hover in the high sixes. I do think that'll be enough to get some people out of their homes, which is the biggest problem we're facing. And just a reminder, for those of you buying in Princeton, it doesn't matter. It's not a rate-driven market. 50% of the market's cash. So, because you're a cash buyer, are you getting a discount on the house? No, you're paying market rate. You're just going to beat the other 7 buyers who have a mortgage and hopefully beat the other 3 buyers who are also paying cash. So you're not getting a discount. And rates, this is not a rate-driven market. This is a supply and demand-driven market. There is no supply and there's massive demand. And just a reminder, the demand follows jobs. Okay, so Mercer County and Middlesex County are the number 1 and 2 job markets in the Northeast. So, I don't know what else to say other than, there's no supply, there's massive demand, all the other things, and we can talk about schools and all the other stuff, but this is the reason people buy houses, because they're secure in their job. So let's talk about the Princeton current market conditions. I know the first part of this was a little repetitive, but I think it stands that it needs repeating. So right now in Princeton, we're down to 24 units for sale. We could hit the teens by the end of the year, which is crazy. As I sit here today, I will tell you, in my 20 years, I've never seen inventory this low. When you look at the active inventory list, there are 3 homes for sale under $1 million. The issue is 35 Stonehouse Drive, which is at the top of the list, isn't actually a home you can live in. You buy it for $76,000 and you have to knock it down and move it, right? You're buying it because it's some sort of mid-century modern, so it's a little misleading. So now you're down to 23 and you're down to 2 homes under $1 million in Princeton. Lover's Lane is a cute 1-bedroom condo. Mountain Avenue is a townhouse. I have to be honest, I'm surprised it's still on the list. And then you jump up the line and I can tell you 36 Linden Lane has multiple offers. So that's gone. So you're really precipitously close to the teens. So under $1 million, there's 2. Between $1 million and $2 million, there's 3. One of which has an offer that I know of. So there's really 2. So if you're a buyer and you're looking, this is what you're looking at. It's a whole lot of nothing. So the pressure is on you to pay, not for sellers to come down in price. So that's as of this morning, right? And I do think we're going to hit the teens. Anybody wants to take an over-under bet? I'll bet you $1 that we do. You can bet $1 that we stay in the 20s, but I think we're going to hit the teens before the end of the year. This is the closing picture. So I'm not going to do a full run on the market this morning, but I wanted to give you a really good picture of the current conditions because there's massive demand. We're doing a buyer consultation every day. We're developing new buyer relationships every day. We do have the people putting their house on the market, but I can tell you not to even come close with the demand that we're seeing on the buyer side. So last year from 11/1 to 12/19, 2022, just the snapshot of November through today in December, there were 39 closings worth $50 million, right? And the average sale price was 12.87. The average house sold for 99.2% of the asking price. When you go to 2023, 11/1 to 12/19, same snapshot, you go down from 39 to 25 closed. It's about 30%. So if you're a buyer, you're down 30% in terms of total pick. Average sale price has stayed the same. We've seen a decent chunk of under $1 million product come to the market and sell. But I can tell you right now, you've gone from 50 million in volume down to 31 million, and you've gone to 100.7%. So if you're not offering at least 100.7% of the asking price, you're not going to get it, right? There are other factors. There's 4 other factors you need to know about if you're a buyer. If you want to know what they are, you can use this as your agent. If you don't, right, good luck. So I'm not going to give away all my secrets on the Wilton report. West Windsor, because I have customers looking at West Windsor, obviously, right? Same picture. There's really nothing for sale, right? You're in the teens, you're in 15, and I can tell you, I know Berkshire has an offer, 16 Berkshire, which is right here. So this has an offer already. There's just not a lot on the market. And again, same thing. And this is really crazy. Look how hot West Windsor is. Last year, just for the product that sold in November through December 19th, the average sale price was $659. Year to date, $915. 103.1% of the list price. So as a buyer in West Windsor, if you're not paying 103% of the asking price, you're not getting the house. Like just what it is. So, and that's the original listing price. when they cut it down, if there's a price reduction, it goes to 104.4. I'm not going to go into that. What's amazing is despite the fact there's less inventory, the dollar volume of transactions stayed the same. And there's 7 less homes that have closed in this time period because there's just nothing on the market. But the value of the homes in West Windsor has gone up so precipitously, right, that, it's just kind of where it's at. I don't see this particularly changing. If you look at Plainsboro, same thing. There's very little on the market, 16 total. The first 1, 2, 3, 4, 5 are 55 plus in the windrows, 6 in the windrows. So there's 6 of the 16 in Plainsboro are 55 plus assisted living. So what does that mean? It means there's 10 homes for sale in Plainsboro. That's what that means. So there's very little on the market. Some of it's new construction. It's not even built yet. So it is a very challenging market for buyers in Plainsboro. Interesting, when you look at the average close price, November 1st to 12/19 last year was $533. Houses were on the market 47 days, 97.1% of the asking price. Year to date, 11/1 through 12/19, same time frame, same snapshot in time, $595. It's almost, just shy of $100,000 more in closing price. Days on market came down. List to sale price went up close to 3%. So, it is what it is. And here's the thing. They've actually had the same amount of inventory closed 24 to 24 in that time frame. So, Plainsboro is outselling itself. And I'm not going to go into every single town. I will do that in 2024. In the first few weeks of the year, we're going to shoot a bunch of podcasts to get you guys up to date and ready to rock and roll for the spring market, which started, by the way, 3 weeks ago. So 2024, I'm going to do a quick outlook for this. So this is from ResiClub.com. If you don't follow Lance Lambert on Twitter, you should. He's a real estate wonk. He knows the market. This is building. This is supply. So we are in a supply crunch. The Bank of America came out with a report and said the United States is short about 4 million homes. Think about that. So what does that mean? As supply goes down, prices go up. And this is a national issue. So what's going on nationally? So Nashville is building. Charlotte, Jacksonville, Austin, Houston, Orlando. All these places are building. Not surprising, a lot of people are moving there because they can get a quasi-affordable house in those market segments. In the Northeast, there is no land. So there is no luxury of available land, which is why you will see in markets like Princeton, etc., ADUs. You will see infill. You will see things like development at the Princeton Shopping Center. Whether you think it's good, bad, or indifferent, you will see it because there's such a dire need for housing, right? So the Northeast, we're constricted by land supply. The Southeast, the Southwest, there's available land. It's just not something we have here. So something that we have to look at. So the Goldman Sachs chief economist thinks housing affordability is so strained that existing home sales will remain suppressed through 2026. So what does this mean? It means that you will not see sellers entering the market like you normally would. Why? Because they bought their house, I'm making this up, for $500,000. They can sell it for $1.2 million in Princeton. The question is, where do they go? Maybe they have $75,000 left on their mortgage. Their rate's 3%. Their payment is next to nothing. They would like to downsize. They would like to get out from under the maintenance of a large house. I had a tree literally fall on the back of my house today. Condo's looking pretty good, or during the storm over the weekend. So yeah, I'd love to be, out from under the yard maintenance. But that being said, where are they going to go? Because if they have to buy at $1 million to downsize and their rate is 6.86, they're probably going to stay put. So what does that mean? It means that you're going to see a suppressed housing market. The inventory situation will, I think, get better. It will not get better till after the first quarter overall. but you'll see a higher inventory count, I think, in 2024. I hope in 2024 than we did in 2023. But it's not going to be a free-flowing market. It's going to be tilted directly in favor of sellers. Buyers, you have to know the core of the market. There's 4 or 5 things you need to know. If you want to know what they are, you can call us. We can be your agent. If not, work with your agent, and hopefully it works out for you. But that being said, it's going to be tilted in the favor of sellers in 2024. It just is. So you're going to see a repressed market just due to lack of supply. And you're going to see high demand due to continued, I think, job growth. Despite all the political machinations of the economy's bad, jobs are good, which is causing high interest rate, which is causing inflation. But at the end of the day, people would rather be employed than not. So that's just kind of what it is. So just a reminder, I will be going into a lot of micro detail on the local markets. Saturday, February the 3rd, 10:15 a.m. Just text me for that. 609-773-8054. And I will send you the Zoom link, or you can obviously pop into the office for that seminar. We'll be doing the tax appeal seminar at the end of February. Those Zoom links will be live and set up in the next couple of weeks. So if you really, 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 really want the micro detail, obviously tune into the Wilton Report. We do that. If you have not hit subscribe yet, please hit subscribe on our channel. We've seen a really nice uptick in subscribers. And I do thank you for that. And that being said, I did want to thank you for your support this past year. I know I get a lot of feedback from people who listen to the podcast, both on YouTube and Spotify, that you find it very helpful, that you find it enjoyable, which I thank you for your support. I look forward to your continued support in 2024 and hopefully meeting you in person, hopefully at one of the seminar series, which we're going to be running throughout the year. So that's it. That is the last Wilton Report for 2023. Thank you for your support. Happy and safe holidays to you and your families and your loved ones. And I can't wait to just basically squish my kids and my family over the holidays. So that's it, everybody. Last episode of 2023 for the Wilton Report. Thanks.